What's up, everyone? Welcome back to the channel. Big news coming this week. Oracle reports earnings on Tuesday, September the 9th, after the bell. This is one of the most important reports of the season because Oracle is right at the heart of two massive stories: cloud computing and artificial intelligence. In this video, we're going to break down what Wall Street expects, what the key storylines are, and how the stock might react right after the numbers drop. Stick around to the end because I'll also walk you through three possible scenarios for Oracle's stock price and what levels traders should be watching. So first things first, Oracle's results. This is their fiscal Q1 2026 quarter, even though we're in calendar Q3. Don't let the accounting year confuse you. What matters is the numbers. Wall Street is looking for about $15 billion in revenue and around $1.47 to $1.48 in earnings per share. If Oracle delivers that, it would mean roughly 12 to 13% revenue growth year over year and 6 to 7% EPS growth. Solid. But here's the thing, with Oracle, it's rarely about the headline numbers. It's about the commentary. What they say about cloud growth, margins, backlog, and AI contracts. That's what really moves the stock. Last quarter, Oracle wrapped up fiscal 2025 with revenue of about $57.4 billion, up 8% from the prior year. The star of the show was Oracle Cloud Infrastructure, or OCI, and management made it clear they're investing heavily in AI capacity. Think new data centers, higher capex, more servers. The good news is that this positions Oracle for long-term demand. The bad news is that all this spending shows up immediately as depreciation costs, which can pressure margins in the near term. On top of that, there's been tons of chatter about a mega AI contract. Many link it to OpenAI and what some reports call the Stargate project. Analysts are itching for details. Is this already in Oracle's backlog? How much of that demand is locked in? And when will it hit the top line? Okay, so here's the earnings call checklists. If you're listening live, these are the 5 things to focus on. OCI growth. Street wants to see cloud growth above 50%. If it's 55% or higher, that's a big bullish signal. Backlog, RPO. Oracle's remaining performance obligations are massive, over $130 billion. Investors want to know, is that growing even faster thanks to AI deals? And how quickly can it convert to revenue? Capex and AMP margins, they're spending a fortune on new infrastructure. Will margins hold near 70% gross and 40% operating, or will depreciation eat into profitability? Oracle Health and AMP applications, progress on the Cerner integration, cost cuts, and any big SaaS contracts. Partnerships and AMP, multi-cloud. How's Oracle doing against AWS, Azure, and Google? Are multi-cloud partnerships paying off with more wins? If you hear good news on these 5 points, that's where the stock will rally. Now let's talk about the market setup. Options pricing into the report is signaling a big move. The implied swing is about 7 to 8% in either direction. That means if Oracle is trading around $235, the market is preparing for a move down to about 250 funds on the low side or up to around 250 on the high side. That's a pretty wide range, and it shows how much uncertainty there is heading into this report. From a chart perspective, Oracle's been hot this summer. The stock ran up on AI optimism, then cooled off and consolidated. That means it's coiled up, heading into earnings. If the report surprises to the upside, you could see a breakout above resistance. But if the guidance is weak, the stock could quickly test its recent support levels. For traders, keep a close eye on the after-hours price action Tuesday night. and then the first hour VW app on Wednesday. Those levels usually set the tone. All right, let's map out 3 possible outcomes. Bullish case, the AI turbo beat. Oracle smashes expectations. OCI grows more than 55%, backlog jumps, and management confidently frames capex as investing against committed demand. If that happens, the stock could gap up sharply, test the high end of the implied move around $255, or even break higher. Base case, solid but capex heavy. Results meet expectations, cloud is strong, but margin commentary is cautious. Backlog grows, but timing is fuzzy. That scenario probably keeps the stock inside the implied range. Choppy, but not a breakout. Bearish case, the guidelight miss, revenue or EPS come in soft, backlog growth disappoints, and management talks about delays in big AI projects. That could push the stock toward the lower end of the range, 215s or below, with traders testing support. For long-term investors, this report is really about 3 questions. Can Oracle sustain high growth in cloud infrastructure while protecting margins? Does its backlog continue compounding and actually convert to real revenue? And can its multi-cloud strategy and SaaS business expand the total opportunity beyond just AI hype? Those are the issues that will matter not just for the next 24 hours, but for the next few years. So that's your Oracle earnings preview. Wall Street's looking for $15 billion in revenue and $1.47 EPS, but the real drivers will be cloud growth, backlog, margins, and AI. Options are pricing in a 7 to 8% move, so buckle up for some volatility. If you found this breakdown helpful, don't forget to smash that like button, subscribe to the channel, and drop a comment below. Do you think Oracle will crush it on AI, or will the capex story weigh down the stock? I'll be back after the report with a full breakdown of what actually happened. Thanks for watching, and I'll see you in the next one.